Well, I think we're going to have some fun today because we're talking about an indicator that is sort of proprietary. It's exclusive to StockCharts, which is fun. But it's also one that a lot of people use. I wanted to sort of dive into them, make sure that everyone knows what they are. And then I also wanted to cover how I use scooters. I think the way that I use scooters is somewhat unique, especially for what I'm going to show you, the sector rotation stuff. But then possibly the most important piece of this is how not to use scooters. I was having some fun the other day and talking to Arthur Hill about scooters specifically, and we were having a whole conversation about the strengths and the weaknesses of the indicator. There are weaknesses. There are weaknesses to any indicator, and we're not going to stand here and say, no, scooters are absolutely perfect. There are things that you've got to know, you've got to understand before you start using an indicator like this. So we're going to sort of cover those, and I'm going to show you how I think you should not use scooters, which is equally as important as how you should use them. So covering scooters, for anyone who's kind of sitting here going, hang on, what? Are we talking about those things with two wheels that roll down the street? No, what we're talking about is the StockCharts technical rank, SCTR. So scooters are a unique technical ranking system that we've created. What we tried to do really was take John Murphy's approach and bundle it up into sort of one number. But we've got this unique technical ranking system that takes the same criteria, which is key, and applies that criteria to a group of stocks and assigns a number from 0 to 100 to all securities in a specific group. So what you can do is you can look at large cap stocks, mid cap stocks, you can look at US ETFs, you can look at UK ETFs. There's all these different groups that you can look at, and the same criteria is going to be applied to everything in that group. So there are two keys. Again, same criteria. I'm going to show you why that's key in just a second. But what this also allows for, this is the other key, is that it allows for these direct and instant relative strength comparisons. What you're getting is this ranking from 100 to 0, from 99.9 down to 0.01 of all the stocks in that group. So you can compare, because it's the same criteria, you can compare that number across everything in the group. Now, what's cool about scooters too is that you can chart that over time. It's constantly updated. We're calculating it throughout the day based on the current charts. It's calculated in real time. And then at the end of the day, there's a final number. Once the stock stops trading, once the markets close, there's a sort of end of day scooter value. We can chart that over time, and we can see strength and weakness sort of develop. We can see strength and weakness ebb and flow for a stock by charting the scooter value over time. So we can display this in two ways. We do this on the site. We have a scooter report page, which is crucial. I use the scooter report page a lot. It's a great place to go to find new stocks to trade. The scooter report page allows you to select your group with that big blue drop down up at the top. You pull that down, you select your group. In this case, we're looking at large cap US stocks. And you can select the period too. This is intraday. You can see how things have changed over a week. There's a couple different options there. But it's going to start at 99.9 and it's going to go down. And it's going to go all the way down basically to 0. And it's going to rank everything in that group. So it's a great place, again, to find stocks to trade, stocks to look at, I would say, because you've got this list that's the same criteria applied to everything in the group and then ranked, which is really cool, really unique. So the other thing that I mentioned is this indicator panel. So when you go to the SharpCharts workbench, when you pull up a chart, you can actually select the scooter indicator and chart that as a panel, just like the MACD or the RSI, anything like that. You can chart scooters over time. So what you can see here, this is actually a couple weeks old. But what you can see is a stock that's gone from a very low scooter value and then gapped up, had some recovery. This is Chipotle. And it's recovered up to a high scooter value. So I chose this specifically because it goes from a low value to a high value in one chart, which is interesting. For those of you also who are wondering what that purple line is across the chart, that's 75. That's a scooter value of 75. It's just a horizontal line. Greg Schnell does a great job of talking about this. I actually got the idea from him. Give him full credit. But think about it. You've got a ranking from 0 to 100. So if you take that ranking from 0 to 100 and you say, I'm going to look at everything above 75, what you're looking at is the top quartile. You're looking at stocks that are outperforming 75% of the rest of their group. which is a really key level. So what I'm going to talk about here, how and why I use scooters. I use scooters primarily to filter the markets and make the markets more manageable. So here you go. Why I use scooters? I use scooters to make the markets more manageable for me. The reality is that there are thousands and thousands of stocks out there that you can trade. Now you got ETFs, you got mutual funds. There are thousands of things that you can look at on a daily basis. I mean, if you're a trader, if you're an investor, if you're looking at the markets at all, there are thousands of things that you can look at on a daily basis. When it comes time to actually pick something that you want to buy, there are thousands of options out there. And the reality is you can't look at them. So what I'm always trying to do is narrow my focus. I'm trying to say, okay, I'm going to trade large cap and mid cap US stocks exclusively. I'm going to play the rest of the world and other asset classes and things like that through ETFs. But individual stocks, let's say I'm going to trade large cap and mid cap US stocks. So now by going to the scooter list, I can say, well, that's still a pretty big group. I only want to look at things that are above 75. That narrows sort of my investable landscape, if you will, and makes the markets more manageable for me. So primarily why I use scooters is to make the markets more manageable. I use them to filter the number of stocks that I can look at, which I'll show you here in just a second. And I also use the scooter value charted over time to kind of keep an eye on my positions. I keep an eye on stuff that I'm watching, stuff that I call stalking. I also keep an eye on stuff that I own, obviously. And the scooter value is just kind of a piece of that puzzle. It's not the only thing I look at, but it's a piece of the puzzle. I'm watching the scooter value and seeing how it changes over time. When I charted it there with Chipotle, you can see that here, I'll go back. You can see that the scooter value is moving. And so if you're watching that, it's an interesting indicator when combined with other indicators that you're using. So the last thing that I do with scooters, which I'll dive into here, is I use scooters for sector rotation analysis. And I'll tell you why that is a good idea. That's sort of the unique piece of what I'm talking about today. So let's talk for a second here about how I don't use scooters, how I think you should not use scooters. Scooters should not be a single standalone indicator. There is no one number, there's no one holy grail indicator that's going to give you all the signals that you ever need. That doesn't exist. Stop looking for it. Scooters are not that. And I, as a representative of StockCharts and as an individual investor, I'm standing up here today and I'm telling you right now, scooters are not a single standalone indicator. They need to be paired with other things. So I have a whole trading system behind my use of scooters. It's part of my methodology. It's a piece of the puzzle, part of the system. It's not a single standalone sell signal. I'm never going to sell a stock purely because the scooter value drops a little bit. It's an interesting reason to look. That's what I call it. It's a reason to look. So a stock with a high scooter value, it's an interesting reason for me to say, hey, I'm going to go check out that stock. If I own something and the scooter value starts to drop, it's an interesting reason for me to say, should I look a little more closely at selling this thing? But again, it's not a single standalone buy signal, sell signal. It's not a standalone indicator. It has to be paired with other things. We see a lot of people that talk about scooters and they complain about scooters because they say, hey, in the case of Chipotle, this thing went from near zero to near 100 in a relatively quick period of time. Well, if we go back to Chipotle, again, I chose this because you get to see how scooters go from 0 to 100. But if we look at this chart, that is a massive, massive gap up. And the scooter formula is relatively simplistic. We publish it online. You can go into Chart School and you can find it. Finding a formula that's not thrown off by massive gap ups in a stock like this is very, very difficult. There are things that sort of throw the scooter formula for a loop. And so occasionally we'll see stuff like this where the scooter value kind of rockets up after a major gap up, and it's a little bit thrown off. But again, if you're using it as sort of a piece of the puzzle, an interesting reason to look or a filter to find new stocks, these things don't really bother you. If you're using it as the only indicator that you look at, then yeah, these sort of major whipsaws, I guess you could call them, in the scooter movements, can be concerning. Now, I bring that up for a specific reason because it relates to what I'm going to talk about here with the sector strategy. But I want to talk at the stock level, before I get into the sector stuff, I want to talk at the stock level how I use scooters. So I use scooters, I sort and filter stocks by their scooter value to quickly avoid underperformers. Again, I'm trying to sort of narrow my investable landscape. I'm saying, okay, there are 500 stocks in this group. My reality is I can't look at 500 stocks. I've got too much going on. I need to look at 50 stocks or even maybe 75 stocks, 100 stocks, whatever it is. I need to narrow that landscape down. So by taking one of these groups like mid-cap US stocks or large-cap US stocks and saying I'm not going to look at the chart if the scooter value is under 75, it's a way for me to limit that sort of investable landscape. And it makes the market more manageable for me. There are tons and tons of stocks still left in that list of scooter values above 75. I mean, you still got 50 to 100 oftentimes in that group. So it's not like I'm narrowing myself so much that I don't have anything to look at. But again, it's narrowing that down, and I use scooter values to sort and filter stocks to avoid underperformers. If it's got a low scooter value, I'll move on. I'll find something else. There are plenty of stocks out there for me to trade. I chart the scooter value over time, and I pair that with, again, the rest of my analysis, which is trend, money flow, momentum, and something that I've talked about on here before. I call it the Fantastic Four analysis. It's basically a top-down relative strength strategy that I use. There's actually a video back from a couple months ago, probably the last time I was on here, where I talked about that strategy a little bit more. So if you want to go find that, you can do that. But and again, I monitor the scooter value for my open positions. It's not the only thing I'm looking at, but it's a piece of the puzzle. It's something that I'm keeping an eye on. When I talk about sorting and filtering by scooter value, this is something that I wanted to show. I want to show you how to do this. And I'm not doing it on the live site. I'm just doing it here in the presentation. But this is a scan that I've run. Okay, I've got a scan. It's actually called the Rising Scooter Above 90 scan. It's sort of a modified version of a scan that Chip loves to use, actually, which I like to run once a week. Just for fun. So I've run this scan. I've come to this page. I've got a data table here with a bunch of stocks in it. In this case, it's got 15. So what I do is I first sort by scooter. I've got the little green circle there. You can see it here. I click scooter, and what that's going to do is sort that table by scooter value, from the highest scooter value down to the lowest. Now, our tables on StockCharts are set up so that you can sort of sort by 2 levels. So my second step is to sort by U, which stands for universe. So I want to organize things from the highest scooter value to the lowest, and I want things grouped into the different universes, scooter universes or groups that they belong to. So what you can see is that first I clicked scooter, then I clicked universe. Now it's sorted by scooter and universe because we've got that 2-factor sorting. And so what you can see here is the first group up is ETFs. There's only one of those in this scan. Then I've got the large cap stocks here. And so from top to bottom, I've got the large cap stocks. Oh, this is actually reversed, but mid cap stocks are next. Small cap stocks are after that. So what I can quickly do is say, here's a group of stocks, large caps. Here's a group of stocks, mid caps. Here's a group of stocks, small caps. And I can look from top to bottom at their scooter values. It's a really quick way for me to run a scan or find a list of stocks and sort it by scooter and sort it by universe, and then just click open the ones that I think might be interesting. I'll click open the stuff that's in the 90s, click open the stuff that's in the 80s, and I can breeze through those charts and find interesting stocks to look at. That's what I'm trying to do here with scooters, is find interesting stocks to look at. And I've got, again, my whole methodology behind it when I actually pull up the individual charts. And that's what I rely on to make, sort of final decisions. But scooters allow me to filter large groups and find interesting stocks to look at within. Here's, just in case you want it, you can screenshot this or something like that. This is the scan code for that Rising Scooter Above 90. Basically what it's doing is, in this case, looking at US stocks with reasonable trading volume and cutting out the low price stocks there. But then from there, it's looking at stocks that have a scooter value above 90, and that scooter value has been climbing for a few days. So we call it the rising scooter scan. Now, talked about stocks. Let's talk about the sector stuff for just a second. I talked about the sort of whipsaws that you sometimes get when you've got stocks that gap up. I mean, Tom was looking at that stock that was down, what was it, Kroger's down 20% or something today. That's going to throw the scooter value for a loop. And we're not here trying, StockCharts representative here, we're not trying to argue that. It throws the scooter value for a loop. It's really hard to handle massive gaps like that. Stocks, reasonably shouldn't do that. But they do, and so the scooter value gets thrown off. What I find interesting is that when you use scooters for sector ETFs, think about what sector ETFs do. They don't really gap aggressively. They don't move aggressively. Sector ETFs, relative to stocks, relative to individual stocks, they move much more smoothly. And so because of that, because they move in sort of more smooth, predictable patterns, the scooter value doesn't really get thrown off by sector ETFs. It's not subject to those kind of wacky gaps that you'll sometimes get after big earnings beats or big earnings misses or anything like that. Those don't exist for sector ETFs. So when you track the scooter value for these sector ETFs, you actually get a very consistent, very smooth sector rotation tracking strategy. So I do that as part of my sector rotation analysis. I'm looking at the individual charts of those sectors. I'm using the sector summary page on StockCharts. There's a whole bunch of things that I use. But on top of that, what I also do is I document and rank on a weekly spreadsheet the scooter value and the perf chart position for all of the sector ETFs, the S&P sector ETFs. I do the same thing on a daily spreadsheet. So I'm tracking this once a week on Sundays, and I'm tracking it every day when the market closes. I literally have a reminder that pops up on my phone, my laptop, and everything, and it says, go update the sector spreadsheet as soon as the market closes. So on a weekly basis and on a daily basis, I'm tracking these sort of sector rankings for the sector ETFs. Now what it looks like is this. This is my sector rotation spreadsheet on a weekly basis. This was updated, as you can see, on the 9th. And so what I get is, for all of the sector ETFs, I'm spitting out the scooter value. I update this manually because I actually like the process of going in. I know it's a little wacky, but I like the process of going in and manually updating the spreadsheet. It sort of keeps me honest. But I'm tracking the scooter value and then the last scooter value. So every week, this column gets copied over to this column, and then I can actually track the changes. I can see sort of how things have changed from week to week. I track their perf chart rank, basically how these ETFs rank on a perf chart, over 120 days on the weekly spreadsheet. I also track on the weekly spreadsheet the RRG quadrant for each of those. And I use SPY here as well because these are S&P 500 sector ETFs. And so when I add in SPY, which is tracking the S&P 500, which is an ETF, so I can actually track the scooter value for it, I can sort of see where things are relative to this broader index, which is really interesting. So then on a daily basis, I kind of zoom in a little bit. Again, this gets updated every day at the market close. Here it was updated yesterday. I track, again, the scooter value for all of these sector ETFs. I keep track of where it was previously so I can see how things are changing. And I track the perf chart rank this time on a 30-day basis. So a little bit narrower view. On the weekly basis, I'm looking at 120 days. On the daily basis, I'm looking at 30 days. So I can also compare these two spreadsheets and sort of see what the differences are. Again, I pair this with other analysis. I'm not only looking at scooter values here. I pair this with my own chart analysis of all the sector ETFs. I do this every single week. I run through all of these without fail. If I don't do that on a Sunday, it's a bad day. So this is kind of the sector chart layout that I use. I've got how it's performing relative to VTI, which is the total market. How is this ETF performing relative to the total stock market? I'm tracking the PPO and looking at trend and charting this thing. I'm looking at volume of these sector ETFs and some interesting things. And again, I've got the scooter panel down here at the bottom. So my point being, this sort of daily spreadsheet routine that I have is paired with, and looking at the scooter values, is paired with traditional chart analysis on these sectors as well. And the same goes for stocks. I'm looking at scooter values in addition to my traditional chart analysis. So, Tom, this is for you. Hopefully that was helpful for everyone, just kind of running through scooters. I'm sure you guys have some questions or something, so we'll keep chatting. But one last note on trend, because Tom, I know you had a question for me that you wanted to ask. I got a picture of Tom in here. Tom, this is you right over here, right? Isn't that looks like Bully with the glasses
that's
on?
Me.
Yeah, that's you. I think that's you. Tom, I know you've gone to a July 4th party, right? You celebrate July 4th every year.
Yeah, this weekend's the hurricane party, but yes, I've been to a July 4th.
This is the hurricane party. Okay. Well, so I want to talk about trend and investing in a bull market. You go to a July 4th party, right? What do? You show up, do you bring your 6-pack of beer, you put it down on the table, and then you say, all right, guys, see you later, and you turn around and leave? That doesn't sound like you. No.
Yeah,
no.
I leave the 6 cans, but they're
it's a little later on in the evening. You hang around. You got people at the party. You have a good time. You bring your case of beer on the July 4th or whatever, and you enjoy the party. When I go to a party, I don't sit around waiting for that party to end. Now, I know the party's going to end, especially with July 4th. That's why I bring up July 4th, because July 4th parties have to end. You know why? It's because July 5th comes around. Eventually, it's July 5th. You can't have the July 4th party anymore. And I know that party's going to end, but I'm not sitting around worrying about it, because slowly people are going to start to leave as the party goes on a little too long, and eventually I'm going to have an exit, and I'm going to say, yep, I've been here long enough. I'm going to get out. The same goes for investing in a bull market. The same goes for investing in strong trending stocks. That's why I'm bringing this up. It's always funny to me when you've got a really healthy bull market like the one that we've had for the past 10 years. And everyone is constantly saying, the party's going to end, the party's going to end, the party's going to end. Well, that's fine. I'm not disagreeing with you. The party is going to end, but I'm still going to stay at the party until it ends. And it's not just going to end in, no July 4th party that you go to ends in everyone panicking, rushing for the exits because they have to leave in the next 6 seconds. It ends by people filtering out the door. The party's going to end, but that doesn't mean it's not going on right now. And the same goes for me investing in strong trending stocks. So, for example, I know, Tom, you wanted to talk about this one. You've got a stock like Square. This is a position that I have. It's still an open position. It's still something that I own. But it's been trending. It's been going up and to the right for a long time. And so when people look at a stock like this, they say, here's a stock that's gone from 25 to 80. This is actually from a couple weeks ago, so it's even higher than that now. But people say, this is a stock that's gone from 25 to 80. The party's going to end. The party's going to end. The party's going to end. Well, in reality, zoom this back. It's actually over a longer term. It's a stock that's been trending really nicely, consistently going up and to the right. It's a stock that's gone from 8 to 80, not 25 to 80. 25 is here in the middle. So me investing in strong trending stocks, trading strong trending stocks, I like to say, don't discount leadership because you're too scared to be late to the party. Don't discount leadership because you're too scared for the party to end. Stocks send you signals, and when you're drawing trend lines and things like that, when they break those trend lines, it still leaves you enough time to get out. So anyway,
well, that was a great analogy, by the way, Grayson, and I live by analogies. I love to use analogies. So your investing analogy is just hang in there and wait until the party ends. Enjoy the party, and when it ends, then you'll move to the back to the sidelines and go back to looking at your scooters or whatever. But here's my analogy of how this is my trading strategy analogy. So I go to a baseball game, all right, and the baseball game's 9 innings. And, of course, you don't want to leave in the first or second inning because you got 9 innings to go.
Yep.
But if your team's up 10-0 after 5 innings, I want to beat the traffic out of the stadium.
That's true.
So
that's true.
That's my analogy. I take that 10-0 win, and I get the heck out of Dodge, and hopefully the other team doesn't come back. And
that's true. That's a good analogy.
Speaking of that, I mean, Greg uses the analogy that, if you've got a high scooter, it's like having a high batting average. Do you want to put your money on the high batting average guy or the one that's really low?
Yeah.
So I do have a couple questions for you.
Sure, shoot.
Okay, so one of the questions is, why is it some of the symbols don't have a scooter?
That is a good question. So we manually add things to those groups. A lot of times there are new stocks that take a little bit of time to add. In general, we try to catch as many as we can. We've got a whole data team that's sitting around trying to do that. But if you find something that doesn't have a scooter, that you think desperately needs a scooter, let us know. Actually, we really appreciate those notes from our users saying, "Hey, this thing doesn't have a scooter," and then we go, "Oh, yep, we got to add it." We have to manually add them to those groups, though. So that's generally why.
Yeah, because I know the question comes in as well, why the industry groups don't have scooters.
Yes, in the like in the sector summary page. So
Yes.
those are true indexes. What we use in our sector summary page at the top level, we use the S&P sector ETFs. But when you drill down into the industry groups, they're actually indexes. They're not tradable. If it's not tradable, we're not going to assign a scooter value to it. So that's where that comes from.
That was pretty much what we had in the chat room.
Okay.
Somebody asked how often the groupings are updated, but I think we sort of covered that. It's as
we try to
as
keep it going. We try to make as many changes as we have to on a daily basis. Really, again, we've got a whole StockCharts data team. They do a fantastic job. They work really hard upstairs.
One other thing that I would point out is, Grayson, about the scooters, and I've talked about this a little bit on the show, is that you can have a scooter that jumps to the upside even when the stock is moving lower. The rationale behind it is that 30% of the scooter calculation is based on the rate of change using 125 days.
Mm-hmm.
And so if a company had a huge gap down 125 days ago, you could actually have a stock that's going down today, but because the rate of change jumps from 120, once that gap is gone, and now you're calculating that rate of change from a much lower level from back at the beginning of the period, that can result in a big jump in the scooter. I've seen stocks jump as many as 20 points in their scooter rank when a big gap disappears from the past history. So I just wanted to point that out. Sometimes what you see and what you expect to see is a big move up when the scooter is rising, but you can get that one day jump without a stock even moving higher.
Yeah, and kind of related to that too, one thing that throws people for a loop sometimes with the scooter value is that they expect everything to be low in really, really bearish conditions, for example. But it's a relative measure. So we're ranking this group. So even if every single stock in the large cap group was going down really, really sharply, which wouldn't happen, but let's say hypothetically every single stock in that large cap group is just absolutely getting hammered to the downside. Well, something still has to be 99.9. Maybe not 99.9 specifically, but something still has to be up at the top of the list, the ranking, and something still has to be at the bottom. So no two stocks can occupy the same number. So sometimes you'll have, like, in really strong bear market conditions or something like that, even when everything is going down, you'll still end up with stuff that has kind of a high scooter value because it's relative. It's saying technically this is stronger than other things, but that doesn't mean that it's super, super strong and you want to trade it. Right. So actually one thing that's interesting for me, like with these, I'm looking at the sector rotation spreadsheet. So you'll see shifts in this. Right now, you've got 2 up in the 90s, 3 in the 80s, and a bunch in the 70s, and everything except for financials above 50. That's kind of unusual. These are all relatively high numbers. They'll actually shift at some points, and you'll have primarily all of them are below 50. And that actually sends an interesting signal to me. I kind of keep an eye on individually where these are, but also as a whole, kind of where this block is in the 0 to 100 ranking list. So anyways, that's what I got.